Hello folks, welcome back to my channel. Tesla remains one of the most polarizing stocks in the market and has risen in 2021 despite a recent pullback from Elon Musk selling shares and SEC probe of its solar business, and perhaps some good old-fashioned profit-taking. I believe where Tesla goes in 2022 will depend on several key catalysts that should emerge over the course of the year. Expectations are already high with an eye-popping valuation and Giga Berlin set to open in early 2022. So Tesla has little room for error. Musk, who is also the founder and CEO space exploration company SpaceX, recently passed Amazon founder Jeff Bezos as the world's wealthiest person, as the rising price of Tesla pushing his net worth to around $300 billion. He owns about 17% of Tesla's stock, which sold for almost $1,000 each on Monday. Time cited the breadth of Musk's endeavors, from his founding of SpaceX in 2002 to his hand in the creation of the alternative energy company SolarCity, in addition to Tesla, the most valuable car company in the world. Though it only became profitable in recent years, Tesla is far and away the world's most valuable car company, at one point this year crossing the $1 trillion market capitalization threshold. Detroit heavyweights Ford and General Motors are worth less than $200 billion combined. Musk said last month that SpaceX will attempt to launch its futuristic, bullet-shaped Starship to orbit in January. NASA has contracted with SpaceX to use Starship for delivering astronauts to the lunar surface as early as 2025. Musk said he plans to use the reusable ships to eventually land people on Mars. Time highlighted Musk's recent admission to his Twitter followers that half his tweets were made on a porcelain throne. In its profile of the provocative CEO, Time went on to chronicle one of those toilet tweet storms in detail before concluding, "This is the man who aspires to save our planet and get us a new one to inhabit." Musk's comments and regulatory filings suggest he had always planned to exercise options he was granted in 2012, which expire in August 2022. He told a conference in September that a huge block of options will sell in the fourth quarter, and filings show that he put in place the 10b5-1 plan to start exercising options and selling some to cover taxes earlier that month. However, Musk has also been selling some of his personal stock of the electric vehicle maker. Overall, he's now sold almost 12 million shares. It's as of yet unclear what exactly Musk meant by 10% of his Tesla holding. Before his Twitter poll, he was the beneficial owner of about 23% of the company, holding roughly 170.5 million shares and 73.5 million exercisable options. According to a June filing, Musk still has more than 7 million options from his 2012 pay deal to exercise before August 2022. They give him the right to buy Tesla shares at a price of $6.24, less than 1% of Monday's closing price of $966.41. Does Tesla's current valuation make sense? Tesla is not only the most valuable automaker, but it is more valuable than the next 5 top automakers combined. To say that the market is discounting a lot of future success is an understatement. It implies that Tesla has such an astronomical technical advantage that no other automaker can ever catch them. Considering Tesla has spent less than $1.5 billion on R&D from 2017 to 2020, I find this highly doubtful. Any Tesla bulls still think we're getting FSD soon. I'm sure the next version will really be the one. Sure, by traditional metrics, Tesla's valuation remains lofty and priced to perfection. I have my doubts on Tesla's ability to grow its valuation from here, but Tesla has strong tailwinds entering 2022 and has a very good chance of significantly exceeding estimates, especially over the next few quarters. Several key catalysts will determine how much upside Tesla's results and share price have in 2022. Key catalyst number 1: global chip shortage and auto supply chain normalization. Tesla has done a fantastic job mitigating the chip shortages and other automotive supply chain issues facing automakers this year. Its low volume and the commonality between models likely helped avoid major production challenges. New car availability is almost non-existent, and dealers have sold at or above MSRP the entire year. As a result, used car prices have also gone parabolic. A personal example: the BMW I bought last year I could sell for a profit today. This is a dream environment for any automaker that can maintain production. As long as global production remains constrained, Tesla will benefit and will likely be able to sell every car it produces at high margins, even with additional supply from Giga Berlin. Key catalyst number 2: domestic U.S. pricing and demand. In addition to the global auto shortage, Tesla in 2022 will likely be getting some major help from the U.S. government in restoring the federal EV tax credit, as the Build Back Better plan includes a $7,500 $12,500 refundable tax credit for the purchase of a new EV. There are no automakers that need government help right now, and EVs are selling well on their own. But this is a major positive catalyst for Tesla, General Motors, Ford, and other domestic EV manufacturers. Remember the $37,990 Model 3 SR from last year? It's a distant memory. Like most of us learned in basic microeconomics, subsidies like this ultimately go to the manufacturer, since it allows them to raise the price by the same amount of the subsidy. Indeed, Tesla has been raising prices all year in anticipation of this. If the Build Back Better plan passes with the EV subsidies included as proposed, Tesla will likely come in far above current estimates, especially early in the year. Tesla being able to maintain the price and volume throughout the year will be key to watch, since Model 3 and Model Y are no longer new to the US market. The following chart is really a Rorschach test for Tesla investors. One view of this chart is that Tesla is still growing in absolute terms and is dominating the market. Another view is that competition has finally arrived and has exploded in 2021, with even more new models set to arrive in 2022. Tesla's 2021 European sales are also being helped by the introduction of the Model Y mid-year, which was not supposed to be sold in Europe until Giga Berlin was online. Tesla changed its mind and is importing Model Y from China. Once Giga Berlin comes online and ramps production, will there be enough demand for both factories? Answering this question will be the final key catalyst I'm watching for Tesla in 2022. How fast can Europe handle the EV transition? Anyhow, a corollary to the Europe EV demand story has to do with government subsidies, and when EU countries may start to pull back from them. I believe this could happen sooner than many expect. Europe's lead in EV adoption has a lot to do with substantial tax breaks in the majority of markets. In many markets like Germany, these accelerated in recent years, partly as a stimulus measure. In the push to greener power sources, Europe has closed many coal-fired plants and increased its dependence on less reliable wind and solar, as well as natural gas supplied by Russia. This was a recipe for disaster. Electric rates in much of Europe have spiked recently, not just near-term rates but longer-dated rates as well. These kinds of cost increases will show up in customers' bills. Depending on how bad this gets this winter and beyond, it could cause European policymakers to rethink the pace at which the EV transition can happen and allow some of the subsidies to roll off. Conclusion: 2022 is shaping up to be a terrific year for all EV manufacturers, and especially for Tesla. Indeed, Tesla's Super Bull Pierre Ferragu is out with a new $1,580 price target based on increased margins and deliveries. The key question is, how much of this success is priced in, since Tesla has nearly doubled from its June 3rd low of $572.84. This is all for today, folks. If you enjoyed this video, then leave a like, and if you are new, then don't forget to subscribe. Stay tuned for the future updates. See you till the next video. Thank you for watching.